Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Wednesday edition of Benzinga's PreMarket Prep. Spencer Israel here with Joel Elconin. Dennis Dick is still with the back trouble, so he's on the IL for another day, but we hope he joins us tomorrow. We hope he's feeling better. Doesn't matter, though, because we've got a lot of news to discuss. We have this impeachment development, which is for the first time, really, since Trump took office. We saw the market react yesterday to actual non-trade war developments in Washington. So we'll talk about that. We'll talk about Nike. What a quarter. Holy cow, was I wrong about that one. Best Buy had some guidance. Altria and Philip Morris called off their merger. And our guest today is definitely a show favorite, Anne-Marie Baiynd, CEO of thetradingbook.com. She would join us here in a few minutes. Joel, what's the word here in the overnight trading session?
Well, just for a triple D update, bad back, and he's not even trading. That's has a hard time sitting at the desk. So good wishes, best wishes out there, triple D. Get better soon. S&Ps are in the red yesterday. We made a decisive move even before the impeachment lower. We took out last week's low. That's going to serve as resistance, 29.79, your pre-market high. Last week's low, 29.8075. So if there's any hope for a rally for the remainder of the week, we're going to be trading in the 29 handle by the end of today's session. Crude, it's almost like that event never happened, down to $1.07, 56.22. Looking to fill the gap created last Sunday in the futures markets. If you're really looking for a target here, don't know if we're going to fill that gap today, but you need to get into the 54 handle. That gap comes in at 56.10, actually. No, that's not correct. 55.44 would fill the gap in the trading action from the Aramco delay. Silver in the red as well as gold. Gold by 480 at 1535.40. Silver in the red by 5.3 cents at 1857.5, and some margin calls and liquidation, perhaps the reason at BitMEX. The reason for Bitcoin, it's trading down $50 now, but it got whacked yesterday here, 8,330. So Bitcoin bulls are on the hills in today's session. We haven't been below 8,000, I believe, since June in the Bitcoin futures contracts. So let's we got some earnings, we got some news. We'll stay on track here until we get Anne-Marie in a few minutes.
I do feel like yesterday was significant, though, the reaction in the S&Ps at around 12:30 in the afternoon when it became clear that Pelosi was going to announce something later in the day in the beginning of an investigation. It's significant because I don't really feel like we've reacted that way before to non-trade war headlines out of DC, right? And trade war obviously, affects businesses, so you would expect that to reverberate through the market. But for all the headlines and all the investigations, the market kind of just shrugged everything off until now. So I do feel like yesterday was a bit of a watershed moment in terms of how the market interpreted that news yesterday. Do you agree with that?
Well, yes and no. Yes, that, it's a pretty big political event. Number one, we don't know what exactly is going to happen, how far the proceedings are going to go, right? So how can you react? Number two, if it does happen, then Pence steps in, and I think he'll be consistent with the policies of Trump.
Sure.
And the ramifications for 2020, it's a little bit early to predict that. For me, I'm not surprised by the move in the market yesterday. And I think even if you wouldn't have had that news, you might have had that kind of move. We had a quiet expiration, and we had a tight range, and we had a weekly low. And yes, that pushed us through the weekly low, but I think just overall, I just think the market was set up for a move, and you need a catalyst for the move, and there it was. But like I said, we took out that low from last week in the futures contracts. Very important for us to get back above it today and for the remainder of the week. And then also, if you don't want to, seasonal patterns come and seasonal patterns go. But, the Jewish holidays are coming up. Traditionally, sell Rosh Hashanah, buy Yom Kippur. So if people are looking to, take profits or do any kind of seasonality trading, though I will say it hasn't held up in past years as it has in prior years. But those are a couple different factors that today.
Yeah, I mean, I think any impeachment process would take years. Right?
Could they get it done before the election? I mean,
probably not.
Yeah.
And so with that in mind, this is probably a buy the dip opportunity.
Okay.
Just because there is no way anything gets done, I think, before the election. And even if let's just pretend hypothetical, they do the House impeaches him. There's no way he gets. There's no way the Senate. There's no way that gets to the Senate. So this is probably a buy the dip is how I would say it. But I've been wrong before, and I tell you, I was definitely wrong yesterday in Nike. Holy cow!
You're not wrong yet, though, Spencer. I mean,
well, no, I think it's fair to say that I was wrong on this one. So. I looked at the chart. I saw $90, right? Obviously, I looked at Foot Locker. I looked at Under Armour. I thought they would have to blow this quarter away for the stock to break 90. And what did they do? So they blew the quarter away. EPS 86 cents. 86 cents versus a 70-cent estimate. Sales 10.66 versus $10.42 billion. So a very healthy beat on the top and the bottom line for Nike in the first quarter. Some growth numbers that they gave. Digital sales up 42% on a year-over-year basis. Double-digit growth across the board, all their brands. China was healthy. Great quarter across the board there for Nike, and they blew through 90.
You know what? Mr. Maps just made a great point here. He doesn't think the dip had anything to do with the impeachment. He thinks it was Trump's speech yesterday.
Oh, that could be it. Yeah, that could be it.
And he basically, and I agree. He threw the trade deal prospects out the window there. So that was something that happened in the morning. I was watching the market during his speech, and that's a great point. That's a great observation. I have to concur with Mr. Maps on that one. What a great name in the chat room. I wonder what the origin of Mr. Maps comes from. But let's move on. Nike blew it away, took out the all-time high, up 470. I give you a number, 92.65. Let's just call it 92.50. You got up there. You tried to get up there after hours, failed. Got up there again this morning, failed. So someone's working out of a piece of stock, and they want out at the 92.60 area, 92.65, your pre-market high. We're 70 cents above that level. So I'll just say the longer it takes to get to and over 92.65, blue skies ahead after that. If in fact, you open up at like 92, you go 92.10 and then stutter and then come back down under 92. I'm just giving you a possible setup scenario. If you have that higher open, fail to take out the pre-market high, could see some downside. Not a heavily traded stock in the pre-market. What do we have? 262,000.
No, it's pretty heavily traded.
That's big volume for Nike.
Yeah.
So he could sweep out the book. I'm not sure what's in there, but I'm sure those people with the GTC orders in. Let's see, what was the all-time high? The all-time high.
It's like 90 on the nose.
89.97.
Okay.
Yep. So we'll see. We'll see if it doubt it can hold it down off the open with all that volume.
This is one I feel like it had everything going against it. Its peers were bad last quarter. Under Armour had a bad quarter. Foot Locker had a bad quarter. You saw triple top there at 90. Man, and I was looking on Twitter yesterday at 401, 402, 403. And everybody agreed with me. Everybody that I just searched for the hashtag Nike, everybody was agreeing with me. This is not going to be good. Not going to be good. Well, what do we know?
You know what I can understand? I mean, I wear Nike. I wear Nike stuff. You know how often I buy a new pair of Nikes?
No.
I mean, like, Once every 2 or 3 years? I don't know. Maybe when they wear out or something. My foot's not growing anymore, but someone
Well, I hope not.
someone is buying.
It's all about that China growth and that e-commerce growth, the online growth, and both.
How was their online growth?
Up 42 digital sales, up 42% on a year-over-year basis. They've now had double-digit growth in China for 5 years in a row. So they are nothing but consistent.
So people are just not going to Foot Locker. They're not going to these places, and they're just ordering directly from Nike. That's good.
And then you're getting the analysts this morning. The analysts that had buy ratings on are playing catch up with their price targets, raised to 106 at Stiefel, 104 at Pivotal, 101 at Piper, 100 at Wedbush, 95 at UBS. So
we got a little bit of a rally going here. What is going on here, folks? I'm not seeing anything on the wires here. We are almost unchanged. Thank you, Jimmy Vegas. I'm taking a look here. S&Ps are starting to rally here. We're unchanged here, going unchanged. Little rally here in the pre-market session. We didn't really have any 815 numbers, but good move here. I'll tell you, 2980, big area to get over today.
And that's a good point, Spinner. I guess Under Armour, in the world of shoes, Under Armour was the exception, not the rule. Skechers had a good quarter, you're right. Crocs has been surprisingly hot. So I guess people are just buying shoes. It's a good time to make shoes right now. But
shoe, what's the, is that, shoe kind of, oh, what about DSW? That's off the board.
Yeah,
Who took that over? Go private?
Yeah, that was a couple years ago, I think.
Really?
I don't remember who took that.
I never liked that place because the shoe, you get one shoe and then you can never find the other shoe in those places. Yeah. People mess them up in the boxes, but we'll see if Nike holds. You get a little bit of a fade.
All right. Altria and Philip Morris here are staying divorced, at least for now. They have ended their discussions on a remerger of sorts. So that is off the table as of about an hour ago, 40 minutes ago or so. And both stocks blasted off after that news hit the wires.
Yeah, that's just going to be a tough one. PM, the recipient, a little bit more of the boost here. Someone got real excited here. Took it up to $80. Actually, 80 right on the nose. You back off 330 from that area. Boy, oh boy. Nothing on the daily charts here. 81.57. Use 80 as a target. Did 81.57 off that. I mean, they pounded this stock off that news, and I tell you, folks, they pounded it. It's going to go back up, but it's not going to go back up as easy as it went down. I mean, I imagine this started when it was around the $84 area, so it's going to take a while to get back to that area. MO getting a little bit of a pop, $1.50. That's up near the highs of the pre-market session. That comes in at 42.45. What do we have? Do we have any levels there? No, we don't. So if you're looking for something above that 42.45, 43.51, your September 13th high.
And who is it that has the big jewel stake? That's all? That's MO? That's Altria, I think. They're going to have to write that down because Jewel CEO's out this morning, and that.
So these vaping deaths I thought they came from people that were doing their own concoctions.
They did. Yeah.
And these guys are getting blamed.
But hey, when you're in the crosshairs of the regulators, watch out. And that's where Jewel is right now. So don't know what more you can say about that. That was a predictable bubble, I feel like. That was a fad. And even 2 years ago, I remember hearing about the epidemic of jewels in like my cousin's high school, for example. Everybody had one, and it's like there's no way that is gonna be sustained long. There's no way the government is not gonna eventually step in and do something. So not surprised. I am surprised that PM and MO this morning called off their merger, but that's why they do it.
Man, we'll see what I have a buddy that is, I think, an attorney for Jewel, but I don't think I'll be giving him a call. I bet you he's pulling his hair out.
Maybe not the best day to do that.
All right, Anne-Marie, hop on yet?
Not yet. So let's do the other earnings report on our radar, which is Cintas, the uniform makers. CTAS had earnings after the close yesterday. Q1 EPS of $2.32 versus a $2.16 estimate. Sales 1.81 versus $1.79 billion. So a beat and a beat for CTAS in the last quarter. As far as guidance, they guided their full year EPS higher than estimates by a little bit. The range they gave was $8.47 to $8.57. Sales guidance also in line there. So a solid full year guidance print and good on the Q1 earnings numbers for CTAS.
Had a bad day a few days ago. Went from nearly its all-time high, took it down to 245. Did you get a gap fill in here? Let me see. This low that you had was at, let's see, where's my gap area? You hit 49.01 on this day. No, I don't think you quite did it. You needed to get to 44.59. Well, you're working your way back into that big red candle. Not sure what the news was for it on that day when it dropped $11. Pre-market after hours high went right to 264.44. We have backed off from that area, so I'll use that as a target. If not, you may get a little bit of a fade. If you're looking for more, the high on the day of the big drop was 267.56. So if you're really super uber bullish, another 5.5 points. And then if it manages to get through there, there's a pair of highs to the 270 area. What was the news, Spencer, on September 6th or the 9th? It was the 9th. It was an intraday move. It was, I don't even know.
I don't have anything. That was right when that like growth value shift started.
Yeah.
I don't know if that was it, but
Yeah.
I don't see a.
Well, this is not a real high PE stock, is it?
No. What is the PE here? Let's see. It's not high.
I'd search for what the reason was on that.
Forward PE of 30.
Okay, so it's a little bit.
Could be lower, but that's not egregious.
See, here's the deal. When you have a stock that trades, a $260 stock, $250 stock that trades 2, 3, 4, 500,000 shares in a day, someone has a large position, they want to come in. There's just nothing in there. That was
right.
And it was actually it was an extended move. It was more than one day. Thank you, Spice. It came off 3 days in a row. So not sure what the news was for that, but some people getting their money back.
All right, a couple other stocks that are on our list, and we have some ratings, and we'll also definitely have some time today for tickers later on in the show. Let's do, what else did I have? Let's do Best Buy here. Best Buy out with some updated guidance numbers, long-term guidance numbers for 2025. But they raised their operating income rate, raised their enterprise revenue numbers for 2025, offered some comments about strategic business decisions and wanting to reduce expenses and typical corporate speak there. But stock did react to this headline.
Pop 68.77 at the high of the pre-market session, coming off a big decline as well. And a lot of these stocks look the same here. Let me identify a high for you. Nothing here. 68.77. I see two highs. Let's call your resistance levels 69.40. and 70. I see a 69.28, 49, 69.90 high. So you're right there. Psychological high like 70 could be come into play today. So up nicely. They're not really running with this news right now. Not sure what your spike high, the reason that went to 74.49 on August 13th, but it did close. That must have been an earnings day or something, but it did close at 71.29. So a couple different levels off here. If you're looking to buy this on a pullback, I would use the top of yesterday's range. It's 67.71. That's boost almost, they went green there for like a nanosecond, and now we're back under 28.70. So that closing price of 28.70 looks like a good level moving forward in today's session.
All right, we'll bring in Mariana at 8:35 here, so we've got about 15 minutes until then. Let's go to Broadcom here. AVGO stock is down following news of a $3 billion Series A mandatory convertible preferred stock offering.
I really don't understand these. I mean, I know they're bad. I know that there's negative implications from them. I don't really understand all the details of this.
Well, convertible offering is just when you're offering preferred shares,
right?
As I understand it,
right. But you don't know what the price is, right? So you don't.
Right.
So
right.
It's not,
well, but it's not. It doesn't have to be in line with the common.
Exactly.
So.
Yep. So it's hard to determine. Street doesn't like it. They don't like it at all. Down $11.06. Looks like we got some more work to do on the downside, folks, based on this pre-market chart. Trading at 271.25. 270 would be the first place of support I would look at. 3 spotty lows right in that area. So let's call 270 your minor support. If we test that, a breach of that, the recent low of the move is way down at 262.50, but a couple targets in between there. 270, another daily low at 64.85, and then that August tanking low at 62.50.
Kind of similar headline here for Lynette with in terms of just security financing. They priced $75 million of convertible senior notes due in 2026, and the stock is down. That's why the stock is down this morning.
Okay.
LCI. So
LCI, isn't that did that stock have a big pop? It did. Ooh, and it kept on going. It had that huge pop. I didn't look at this one.
Yeah.
And because our buddy that was on the show loved this one, and I forgot his name last time.
That's
come on, someone's gonna come
specific.
up with it. Gentile. What's his first name?
Oh, Guy Gentile.
Yep.
Yeah, Guy.
Yep.
That was the Beyond Meat day.
Yep, exactly.
He came on and said he liked Lynette. Oh wait, are we sure? Wait. Are we sure he wasn't short?
Wait, I thought this was the one that he was in. Maybe it isn't. Someone correct me.
I don't.
All right.
Can't remember what everyone says
on the show. I do a pretty good job.
You do a very good job. Okay. There was one or two more stocks I wanted to get to first. Actually, we covered pretty much all of them. Let's talk about AT&T here. So last week, the journal reports that AT&T is inquiring about spinning off DirecTV somehow. Well, they had an interview with John Stankey, who said, no, that's not going to happen, at least for now. He said any review is a part of normal business operations, but they're not specifically going to spin off DirecTV. So that report is essentially refuted right now.
Who wants it?
Yeah, well, yeah, probably nobody.
Yeah, you can't sell something that no one wants.
AT&T, it's held up after that move.
It held up, yeah. And I'm just, you know what I'm doing? I'm figuring that 50% retracement, even though we almost got to 39.90 on that crazy day.
Yeah.
Regular session high that day was 38.75. They took it down to 36.5. So that's a little over a $2 move here, and that takes it back to the 37.5 area. You did get a pop up to 38.01 and then a nice double top at 37.85. So I would say this thing really needs to get back at that $38 level, clear it, and go challenge that 38.75. If not, I mean, not holding this 37.5 and already backing off that area, I think you could roll over, go down, hit that 36.49, and then you almost got to look at a gap fill. Wow, that came within 12 cents of the gap fill, 36.37. So AT&T digesting the move. Important for it to get back over 38.
All right, most notable analyst activity this morning is from Raymond James.
RJ.
They're out on the home builders, and they are bullish, upgrading Toll Brothers, Lennar, and KB Home, all from market perform to outperform.
They must listen to Benzinga's pre-market prep too,
I don't know,
because we have been talking about those stocks and lower interest rates helping these stocks. Is KBH out? Boom, boom,
No,
boom.
that's after the close.
It's after the close. Okay. What do you want to look at? Should we just go broad and go the XHB? Or let's see, 43.05. I mean, it's up near the high. It's kind of not the all-time high yet. You got a couple of resistance points. 44 looks major. And then it looks like the seller stepped off 44 to the 43.50 area. Kind of range bound here. So maybe KB Homes could shake this out. You'd be in between 42.81 and 43.66 for 1, 2, 3, 4, 5, 6, 7, 8 sessions. So digesting that nice run up, not breaking down, but not breaking out either.
Same thing with Toll Brothers and all three, kind of actually.
Yeah, they Toll, yep.
Yeah.
Yeah, this one, 39. Buyers have stepped up at 39, but they haven't been able to push it back up to 41. Lennar, boom, that one made a new high for the move yesterday, up at what was your high from yesterday? It's trading up 79 cents. I don't know if that's an odd lot or not. Yesterday's high 56.05. You're getting a reset of yesterday's high, folks. Let me see what the volume is. I bet you that's just an odd lot. 380 shares traded up there. So 56, nice number. Actually 400 shares traded up there. So not a lot. Let's see what happens at 56 in Lennar. And then HOV. Is that a builder too? Woo! Look at that one.
This is one that
Holy mackerel.
This is one that I own. No, that's a reverse split.
Oh, is it?
This is one that I own. My dad bought for me maybe a decade ago.
Yeah.
My dad bought me like one stock, and this was it.
Really?
So
We'll have to get 'em on.
so that move is a reverse split. Don't be fooled.
Okay. And you know what's another one? Another creeper? Look at Pier 1 Imports.
Yeah, and they're after the close today.
Yeah.
Yeah,
Woo-hoo!
yeah, they're after the bell, and they also did what was it? A reverse split, or let's find out what the exact ratio was that they did. But
They did a lot, but whatever the case may be, 4-14 here in Pier 1 Imports, just reverse split.
Yeah, well, they had a 1-for-20 effective June 20th.
And
So
man, oh man, they're look at that. They caught people sleeping on that one, up at $14. These moves in these reverse split stocks usually don't hold up, but
no.
we'll see how many wicker chairs, incense, and candles they sold last quarter.
The only other analyst activity that I thought was notable was RBC this morning is very bearish on the drillers. They are downgrading Valaris, Transocean, Noble, Nabor's, Diamond Offshore, Independence Contract. So VAL, RIG, NE, NBR, and DO all catching a downgrade this morning from RBC, all only to neutral. But downgrade is a downgrade, and they are nothing but consistent this morning, just downgrading the whole sector.
And they must listen to PreMarket Prep as well. We've been talking negatives on the oil.
Everyone listens to us. What can I say?
I mean, I wish they'd let us know when they're going to do these rating changes here.
That would be illegal.
Rig's been in the gutter. It had to pop up here after the Aramco disruption. Given back, I mean, you just have to look where these stock. This one is actually below where it was before the Aramco thing, and now it's trading in the red. For your low price stock traders, 376 up to 666. That's a 3-point move. $1.50 takes you down to $5. So maybe you find some support at $5. You had a daily low at 504, and then you can see all the lows under $5. Pair of lows at 475. That would be a big move here on the analyst move. And what were the other stocks that
we talked RIG. We've got Noble, NE, Diamond Offshore, DO, NBR, ICD,
they're all back to where they were.
VAL. Yeah, they're all
Valero. What about Valero?
VAL. That's not Valero.
Oh,
That's
it's
different.
VLO.
Yeah, Valaris is a driller. Valero is the gas.
I used to trade a lot of those drillers back at Bright. Smith, SII, and man, there was another one, and those things were just wild. They were fun to trade, but I believe they're gone now. There was Smith, SII, and then there was another one that was just they just moved, and that was a while ago. I think they've been off the board. Let's see. What do we got? It's 8:30. Anne-Marie's coming on at 8:35.
8:35. So we got 5 minutes, and if you got a question in the chat, we're definitely gonna have time today to do some tickers. I know we usually do ticker time on like Tuesday. We didn't really have time yesterday, so we'll do it today. Drop your tickers in. I've seen a couple already. I've tried to write them down as I see them. One that caught my eye that we didn't discuss yesterday, even though they had earnings, was AutoZone, and I know you don't like talking in the super high price news, but it is being dropped in the chat. Let's just do a quick look at AZO because we kind of ignored it yesterday.
First of all, what did everyone think of Nate Tobick yesterday? I know Nick is great always, but Nate came on and I thought he did an excellent job.
Nate was great.
Yeah, Nate was great.
Yeah, he explained it's really like this weird underbelly of plumbing is better. It's like the plumbing of like finance and super kind of obscure, and he explained it really well. So
all right, AutoZone had their numbers yesterday, and I don't even know what the numbers were, but
it was a miss and a miss.
A miss and a miss, but you know what's amazing is you almost got on the chart it looks like, oh, it almost got to yesterday's high, but in the high from Monday, but in reality it didn't. 1167.30 was your high. You went to 1164.85, and then it got flushed. The market had a little bit of flush too, so that probably didn't help it. Great level for you traders here. Use that low from yesterday. Lean on it, 1082.11. You bounced off it back at 1100. The reason I like it is within $5, 1087.57. So that's in the same area. We'll call it 1085 moving forward. And the reason I say that, folks, is that with these higher price stocks, I mean, you got to get your bid out there when it's going down to get smacked, because you may have bought it at 1087.57 using that daily low, and then went to 1082.11, but right back up. I mean, you got to use those. Stick with your levels in those stocks. If it's at your target, stick it out there and get it, and don't fret if it goes through a little bit, because those ones are really tough to trade.
All right, we'll do one more before we grab Anne-Marie. Let's look at ULTA Ulta.
Ulta
sort of made a bit of a rounding bottom since they cut their guidance on the 29th of August here.
Yeah, and we had talked about that 224 level, and it hung out there. What was the exact low of the move? We even looked at that never got there. Well, close, 224.66, and it just hung out down there. It said, buy me, buy me, buy me, and if you did, you're looking okay now. The big area, you wanted to get into that gap area. That's $16 away at 254.50.
That's a long way to go.
Yeah, that's a long way to go. And then you get into the gap. I will say I did talk to a buddy of mine that is in the makeup distribution, and they're moving into Canada. And so
who's they? Ulta?
Ulta's moving into Canada.
They weren't there before?
Nope. So there's some growth.
Okay.
And there's one going in where I took my car in yesterday. There's an Ulta going in at 12 and Telegraph. So
they have these big retail locations, the physical store, brick and mortar, right?
Yep.
How is that? How is that working? That can't work.
Because I think when you I really haven't bought much makeup in my
no
day.
Kidding.
Yes. Maybe I need some. But yeah, I think you got to go in there and put the stuff on, and
not that we would know.
I guess you just can't buy. I mean, I guess once you buy it, then you can go and look on Amazon.
If you can buy a bed online, you can buy anything online. So
I think makeup's different.
Different than a bed, whatever.
I don't know.
All right, 8:35. Let's bring on today's guest, one of our favorites, Anne-Marie Baiynd. She runs the tradingbook.com. She's an author. She's a technician. She is I feel like she's also like our market therapist. Anne-Marie, good morning. Let's see if we can hear you here. Having a hard time grabbing Anne-Marie right now. 1 second while I try to sort out her audio. While I'm doing this, Joel, are we still
okay? Can you hear me?
I can hear you now, Anne-Marie. How's it going?
Great. I'm well. Happy to be called the market therapist. I enjoy that.
Oh yeah. Well, we had you on after a couple of big flushes, and you made us feel a lot better. So, Anne-Marie, why don't you give us a rundown of what you've been doing the past few weeks and how the market's been treating you?
Well, before we get there, I would say that Ulta is really.
I wanted to ask you about that.
Yeah, it is an experience. It's the ultimate girl store. And really, if you are interested in finding something or seeing how something feels and looks, it's a really great place to go. And they try to keep their pricing competitive. They have a preferred buyer program. You get to turn your points in for cash, and it's a fun place to go. So I think if they can manage what's happening now, which really we can turn right into the market space, credit card usage and balances are rising. And so although we're looking at consumer strength, that consumer strength is being driven by what appears to be more credit. And that is a little bit troubling. So this one might sort of take quite a while to fill this gap over the long haul in general. But as we go and slip right into that SPY area, what I'm seeing happening in the broad space is something that looks like selling pressure is trying to build underneath. And so for all of the charts that we look at, we have been seeing deep dips to support that end up being bought. If you look at any of these major candlesticks from, say, June, we hardly have more than a couple of days of aggressive selling, with the exception of the first time we lowered the rates in, July or something like that, late July, that first rate cut. And then now we're looking at the second rate cut. Potentially, we could be seeing the same kind of motion. Really hard to say, but the market is definitely weakening. So yesterday it felt really bad. I was looking at everything. The news was terrible. Everything seemed to be drifting off. And so I went to a heat map to take a look. And of course, we could see the flight to safety stuff, utilities, dividend yielding, pulling up a little bit. We see a few patches of green in the REITs. But consumer goods, also generally a flight to safety looked also good, but still discretionary wasn't rolling off a cliff, right? And so what it tells me is there's still a good chance that we try to make a bounce off of these support zones, but we really are at a major litmus test event. And if things keep roiling like they do on the political landscape, we really could have ourselves a pretty dramatic drift on the horizon.
So, Anne-Marie, when you say the charts you're looking at and the candlesticks, what charts are those?
Okay, so if I look at just generally SPY, which we were looking at, then what you could see is that big dip down sort of mid-July that we had how many days? Let's see, 1, 2, 3, 4, 5 out of 6 days downward, and then we moved sideways. And now we've got the last space for an interest rate cut, which was the last time before. And the general prevailing mindset is when the Fed starts tightening, markets will move down. Now, it only moved down for 5 days before we started holding and moving up again. And that's because we are really the stock market of last resort, right? We're still doing well. We're still near all-time highs. Nobody else is saying that. And as rates go negative across the pond and across the seas, what we are seeing is the flight into US equities. So at the latest rate cut, the prevailing minds are, hey, don't fight the Fed. Fed tightening, we're going to see markets fade a little. Buyers are sort of stepping out of the way when bad news comes across the wires. And we hadn't seen that until the last time that this happened, which was sometime in July. So what we are looking at is a do or die zone that could pull us right back down into our resistance areas near 2884 or 284, 288 in the SPY. We really are at a decision zone today, though. It's a do or die space, or all the bounces will lead to sell zones.
Yeah, Anne-Marie, I'm looking at it that way too. I mean, you had kind of a quiet expiration. I would like to get your take on that. And then, yesterday Trump was speaking. The market was nervous. Of course, you had, the impeachment come out later in the day. I mean, to me, I'm using that last week's low, that expiration week low at 29.8075, right up there with your pre-market high. I'm looking at that as a key level on the downside or on the upside. Man, but on the downside here, I mean, things get pretty thin once you break out of, start to break down through yesterday's low. Give us some potential targets here on the downside.
Okay, so in total accord with that, simply because the mindset, remember what I try to do in the markets is not just look at technicals. I think about how the traders are feeling with news sentiment, because we're all impacted by the things that we hear, and then that turns into market motion. And what we saw yesterday, where we normally had seen buyers holding or trying to toe the line, they simply stepped out of the way. So as we move into this space, we have these dip downs into 292 on the SPY here. If they hold, that's a near bounce zone. If they hold, what we'll try and do is come right back up into the 295, 297, but that's still likely to give us a sell zone, because I think the chart is after the gap fill that's going to be complete at around 288. And so that is really what we are looking for, really driven by the sentiment of traders getting very nervous. And the big news yesterday that we saw all around the wires were that big money is moving to cash. Big, heavy investors are moving to cash. Now, a lot of hedge funds can't do that. Pension funds can't do that. A lot of things cannot do that. 401ks can't do that. All kinds of things can't do that. And so what they'll be doing.
What do you mean they can't do that? I mean, they can.
Well, I mean, the people managing, let's say you have your 401k managed by somebody and it's in a mutual fund.
Uh-huh.
They're not going to sell you into cash. It's just not how their revenue and their business models cycle. They'll move you into something else, but the role is, and the goal is, hey, listen, you got to be 100% invested in the market at all times, whether you're looking at something that's going to benefit from a downplay in equities or a downplay in bonds or whatever. So that's what I mean by that. Not the individual person who is managing their 401k and can simply go in there and go, no, I need to go to cash, right? So that's what I'm talking about. So the bigger players who would look at acquiring in big pockets, that's also something else, right? You will sell off in these big pockets and acquire in small pockets unless it's something that's moved to very deep support. And right now, we're at the top of a gap. And if we're at the top of a gap, that's going to have to prove itself out.
What about stuff that's going on in the repo market? We covered that yesterday, something that hasn't happened since 2008. Is that something of concern to you?
Yes, it is. The question is, obviously the Fed is going to start building their balance sheet again. It's just a requirement for right now. We've put ourselves on this hamster wheel, and we simply cannot get off without fairly catastrophic responses to everything because everybody's overlevered. So the question is really, are there other things that can get tweaked as we work through the liquidity process and get players to become more cautious so that less requirements for the window, in quotations, to open up? And of course, that's going to happen again at the end of the month if there's another problem, right? Because they come on the 15th and the 1st, and that's where big money has to make big payments, and so they have to draw down out of their accounts. When they draw down out of their accounts to make their payments, then we have the liquidity event from the big bank perspective because all the money's moving out. So we're probably going to see that at the end of the month again. The Fed's going to have to come in again, and then the question becomes, is somebody going to start trimming their bills because it doesn't happen? And this is all for the big banks. There's nobody else on the hook.
What about this move in oil? We haven't had John since then. Pop over $60. I don't know if you had a position going into that, but give us your take. Oil down 98 cents today, 56.31. I think I looked at the gap. I think it goes down to 55.41. Can oil come down and fill that gap and rebound back up towards $60, or are we looking at $40 oil in the 6-8?
Well, that's really, so let's talk about that. Saudis came out and said, hey, it might be a lot longer before we can get ourselves up to running. So the API puts a prediction out. Their analysts go, hey, we're going to have a draw. But instead we have a build. So we have a build and nothing coming out of the Saudis. Of course, they're releasing fuel from different places, but still, that shouldn't have happened. We should have had a fairly good draw. Instead, we have a build. On top of that, the UN speech from the president puts everybody on this very hawkish mindset about what is supposed to be happening from more global slowing, and so they are selling it all the way off. My thought was 56 was the line in the sand. Could we have a dramatic sell-off that brings us into that 55.40? Yes, but that's a buy zone there. My thought is this: we are still range bound, and we are range bound because of much bigger problems inside of that space. And so even if we dip very, very sharply to the south, we should bounce back up into the 55, 56 range, which is why when I saw the big 60, 62 level, I immediately began to short the XLE and all of that stuff sitting in there because it spiked up so high right up into its edge. You can see that. And if you use something like a short call spread, which I did, I had the 65s, the 65, 67s, made for a great trade. Actually took it off yesterday.
Good.
So we'll see how well it holds.
Yeah, I mean, to me, I'm just thinking, supply is, demand is still the same. The supply, was cut, but people are more than making up for that.
Absolutely.
Anything else on your radar today? You stepping into Roku here or Shopify or Beyond?
Oh, well, you know what? I got caught on the wrong side of Roku with, I purchased I sold the the 135, 130 short puts because I thought, hey, this is great, but I did it right on the edge. And so I only lost a couple $100 per spread. But this is a good bounce zone. If there's any bounce zone to be had. Now, I'm a big fan of Roku. I really am. Oh, huge fan. We have it at our home in Cape Coral because we're not down there to have, standard cable. And so we've got Wi-Fi, and Roku is absolutely fantastic. We get almost everything we want to watch, and it's superb. What happens is it got thrown out. It's the baby with the bathwater when we had the rotation of value from momentum. And if there's any kind of momentum, what was this, $33 in January, right? So if there's any kind of momentum stock, it is this one. And so people are just selling the late ones to the party or the ones getting washed out. Right now it's heavy congestion. I'm going to watch for it to stabilize in the next little bit. But if it drops down to 94 or comes in at 84, anywhere around there, I'm going to start accumulating via short puts again.
I'm with you, Anne Marie. Roku is a great product, and I have it as well. So whether or not stock is priced accurately,
it's really overvalued at this stage. However, it was just the belle of the ball.
Yep.
Have you gotten over that Beyond Meat took the name, your symbol?
That's so funny. Brian Shannon said that to me the other day.
All
right, Anne Marie Baiynd is one of our favorite guests. She runs the tradingbook.com. She's an author, technician. Anne Marie, thank you so much for the time as always. We'll talk to you later on in the year.
Thanks, gents. Take care. Bye-bye.
Sean Canfield here, new to the YouTube chat, is off asking about Overstock. OSTK, and it's holding in there, right? It did.
Yeah, okay.
It did.
Okay.
Buyers stepped up. 1105 was the low on Monday. Let me see if we had anything. No, nothing really in that. We had some good levels under 11. I probably gave you guys 1080, and it didn't get there. So you had buyers step up yesterday from 1105 to 1122. It had a green day. What's it doing now? Now it's up 17 cents. So you are, let's use a target here. I don't know what your time frame is on your trades, but your first target is 1264 on the upside. That was your high yesterday. So it did get a little bit of a rally yesterday, but came back down to the lows. Maybe that's a little market related. Now I think if you're falling back, I use the support as a close at 1158, and then the pair of lows. Someone definitely wants to bring some stock in here. 1108, 1108, 1122.
I got one talk about iRobot here. A new 52-week low, I believe.
Really?
Or if it's not there, it's darn close.
So 60 didn't hold here. Just got whacked off its earnings report.
It just never
recovered. 57.33, down 35 cents. I mean, maybe you get one of those reversal trades where it comes down through 57.33, makes a new low, and then comes back up. But the stock's still in a world of hurt. What do you have on the monthlies here? I believe those you got some monthly levels at where you got 57 looks really big here. 2 monthly lows, 56.90, 56.61. That was from April and May of last year. So if you're looking for more on the short side or looking to initiate a long, there you go, $57. Alex Joseph wants to look at Facebook. And you know what? This stock's in trouble. And not just in trouble from yesterday, but I'm going to stick with my point on this one. It went to 180.29 yesterday. Why are they doing all these different things? You know, why are they getting into this dating, and why are they doing this currency thing, and why are they?
Because they can.
Because they can't, because they know that the revenue stream is slowing down from what they're doing. I think when a company starts doing things like that, they're recognizing internal problems. And I know Dennis is long this stock. I don't know. I don't like it. I think the story's over, and I think you need to be careful on the long side here. If you're holding out 176.66, that was the low of the move on August 23rd. But that's just my opinion on
The other
Facebook.
side of that is Facebook has such a moat. They don't really have competitors. Like, who is their competitor? They don't have one. Twitter's user growth was stalling while Facebook's was exploding.
Yeah.
I mean, Facebook doesn't really have a competitor. They compete with Google for half of the entire digital advertising market. So, or not half. I think those two combined make up like 85-90% of all the ad spend on the internet. So that's the other side of that, is they don't really have anyone to compete with them. The government is their competitor right now.
Yeah, what's going on
that.
with Libra? I mean, how much money do they spend on that? I mean, and now Bitcoin, currency. I don't know. I just don't understand it. I think it's broken. I think the business model is broken. I think when a company starts doing anything, that's just my opinion. You can trade it as you see fit.
All right, let's look at. Someone brought up the Qs. We haven't looked at the Qs in a long
The
time on
Qs?
this show.
Let's talk about the Qs.
Yeah, I haven't looked at the Qs in quite a while.
Busted out. I mean, trading range, you're up here. New all-time high. Nope, you missed the all-time high there. A little bit more volatile. Once again, bad candle yesterday, and you're gonna have to do a lot to repair that. A couple different levels here. It's in the red by a couple pennies. Let's see. Next level, got a couple levels of support. 186.90. That was your low, but that's where things open up after that, down to 185. So you got to just concentrate on that bad candle. I mean, it had the bad candle 3 days ago, then just took a little breather, and then you had another bad candle again. S&P, someone just said they went green. They did. We are green, 71.25. So we're getting up there. Once again, looking at 28.80 on the upside. Some buyers are coming in here towards the up. Well, we still got 33 minutes before the open, but we are going green. That's a good sign.
Question about Cardlytics. I believe this is a fintech company. CDLX is the symbol on that.
Never heard of it. Good support, trading up 63 cents. Not sure what the reason for that is, but I like the support here. See some accumulation in the lower 33 handle, so good to go to the upside there. On the upside, bad day yesterday. 36.45 was your high. Let's see. If you're looking 35.79, that was a closing price from yesterday. Is there some good news on it, or? Never heard of it. New stock,
they had
IPO.
some insider selling yesterday, or disclosed yesterday, but
Cardlytics. They do something with hearts.
No. It's like a fintech. It's like a fintech play. And then someone dropped in Disney. I don't know if you heard about what Bob Iger was saying, Joel, but he's got a new book out, and in the book he said that if Steve Jobs were still alive, he could easily see Disney having merged with Apple in some way by now. And he also said that they really did consider buying Twitter, but it came down to Twitter being just too toxic for the Disney brand. Which we all knew
makes sense.
Which makes so much sense. So
I'm not going to read the book, and I don't care if you would about Twitter.
All right.
I mean, that just makes no sense to me. Disney is in trouble. I mean, I talked about this one too. I just don't like that big gap underneath. I don't know when all this streaming stuff is supposed to be coming online here, but you are on the lows of the move, and keeping an eye on 131.02. I think the things really open up to the downside. You had the great month a few months ago. You've been holding 130 since then. So there you go. Lower prices if you breach 130 here. I just don't like it. And someone asked about CMG. Haven't looked at that one in a while. bad day yesterday. Look out under yesterday's low. Hard stock to trade. 821.48 was your low. That matched your 822 low. So under 820, you got a real quick move down to 800 in this one, 802.89. And then MPC, Elliot's getting involved in this one. Wasn't Elliot the one that got involved in
AT&T.
AT&T?
Yep.
So I'd use my AT&T playbook on that one. A little, see how much it overreacts, and then see if they can take it up. Like that AT&T hit 39.90 in the pre-market trading. Never saw that. Never even came close. So let's see if that plays out here in MPC, Marathon Petroleum Company. This stock has had a nice run. They must be a little bit more diversified, or they're more of a processor. So I guess when you look at it from still overall, the stock's been in a pretty major downtrend since the middle of 2018.
All right, that's it. I want to thank our guest, Anne-Marie Baiynd. Thank all of you on our chats. Catch our podcast or replay the show on YouTube. Please remember, all the information on our show meant to be used as informational purposes only, not for investing or trading advice. And that's it. Questions, comments, concerns, email us, premarket@benzinga.com. Everyone have a great rest of your day. We'll be back with you on Thursday.